But the way I look at it is those massive drops, it's usually because the players in the market are not ready to take action, right? Like if you look at some of the past drops, it's just because of cascading liquidations and whatnot. But time is really not on your side if you're a Bitcoin bear, because if you look at strategies as one example, they've largely repositioned. So they've taken a hit too, right? Like their share price is down, their preferreds are down, but they've adjusted. So if you think of it as, the Bitcoin price is moving down is some attack. All the battleships have kind of reoriented, pulled back a little bit, and they're ready to defend against the next wave. So, Metaplanet, they've acquired Cybo, a securities firm, and that will allow them to do more things. Like everyone is ramping up against the potential next onslaught of a dip. So everyone is in a good position now, and I think the market as well.
When Bitcoin drops hard, it feels catastrophic. But step back and get what Samson Mow is trying to say here. Most of the violent crashes in history weren't about fundamentals collapsing. They were about structure breaking. Leverage builds quietly in bull phases. Perpetual futures stack up. Open interest climbs. Liquidity thins out on the order books. Then one sharp move triggers liquidations. Forced sellers hitting a vacuum. That's not a verdict on Bitcoin. That's plumbing failure. Now here's what's different. Today, the balance sheet players are not tourists. Corporations holding Bitcoin have restructured debt, diversified financing tools, and extended time horizons. ETFs have created constant bid channels. Sovereign and institutional custody has reduced reflexive panic. Even when prices dip, there are mechanisms waiting, not just hope. Does that mean we can't drop 20%? Of course not. Bitcoin lives on volatility, but the probability of endless cascading collapses shrinks as ownership concentrates into stronger hands and leverage resets faster. Bears are betting on exhaustion. Bulls are betting on absorption. The real question isn't can it fall? It's who benefits if it does. Because every sharp dip transfers supply upward, from weak conviction to strategic capital. And if structural demand is quietly outpacing structural fear, what happens when the next shock doesn't break the system? Stay tuned. The next clip of Samson Mow reframes this even further.
Those big, scary dips are usually because they're just cascading and there's nothing to catch it. But when you have the mechanisms in place, then it cannot dip that far. Those really only happen as a shock, like it's just within a day or something like that. But as time goes on, everyone repositions and prepares, and it makes the likelihood of dropping a lot lower a lot less.
And, you just have the classic, the coins move from lower conviction hands to higher conviction hands throughout the bear market. So as we go lower, the probability that we go lower decreases.
Yeah, I view it as rotation of short-term capital out and long-term capital in. And that's really how money is made in not just Bitcoin, but every market, right? If you look at Warren Buffett, that's the game. The long-term capital wins, short-term capital panics and exits.
But you in another podcast were talking about how gold can be created in fusion reactors, essentially. The downstream implications of Bitcoin mining driving energy near zero makes the ability to create gold come around, right? Because you can create it in fusion reactors. So if you have a bunch of energy, you could create gold, and that the downstream implications of Bitcoin mining would destroy the scarcity that makes gold valuable. And it seems like that would be not too far out of a possibility for us as we have more and more creative ways of generating massive amounts of energy. And so I wonder if that's something that you've ever considered presenting to nation states who are relying increasingly on gold, right? They're decreasing their USD reserves and increasing their gold reserves. And if energy continues to drop, we'll come to a place where you can make gold and then it's not scarce. And then the monetary premium we attach to it could be destroyed quite rapidly, just like glass beads in Africa, when somebody figured out how to create those.
Imagine living in a world where seashells were money. Then glass beads replaced shells. Silver challenged beads. Gold became the ultimate store of value. Paper currency followed, and today, most money exists as nothing more than numbers on a screen. Every generation believed its form of money would last forever, until it didn't. Now consider something that sounds almost like science fiction. Some scientists have suggested that advanced nuclear fusion could, in theory, make it possible to produce tiny amounts of gold. Not economically with current technology, and not at scale. But the idea raises a fascinating question. If one day gold could be manufactured more efficiently, what would happen to its scarcity? And if scarcity changes, does its role as money change too? History suggests that money evolves whenever technology reshapes trust. So are we witnessing another transition? Could Bitcoin, with its fixed supply and digital nature, represent the next chapter in that story? It's a provocative idea, and Samson Mow has a compelling perspective you won't want to miss.
You make sense in theory, and it is a compelling argument. Obviously, I agree, but I don't think it matters. Money is really, it is your ingrained beliefs. I think for gold to suffer some existential crisis, it has to just be, it probably won't happen. The way to cycle out of gold is time. The people that grew up with gold and believe in gold, not understanding Bitcoin, they will eventually, move on and retire and pass on. And eventually it'll be people that understand Bitcoin, understand technology, understand the dynamic we have between energy, information, and money with Bitcoin. And they just replace those people in those positions where they can make decisions to adopt Bitcoin. Because, technically, if you compared that finding where you could manufacture gold in a fusion reactor, that concern is just unexpected inflation, right? And that's the same concern with quantum computing, that, it will do something and increase the supply somehow or bring old coins back into circulation. But if you look at the market, there's no reaction at all because they don't care. They've already decided that the older generation has already decided gold is safe. And nothing will convince them of anything counter to that point. Because
that will be,
gold is far more centralized, right? It's really central banks buying at this point. And Bitcoin is bought by everyone. And because Bitcoin is bought by so many more people, sentiment is much more powerful because there's more sentiment to go around. But how much sentiment is there for gold when the decision is made by, I don't know, probably count them on your fingers and toes, that many people at the central banks making a decision. And they're not reading the news or anything. So they're kind of immune to sentiment because they're so disconnected from reality. So in theory, yes. In practice, we just wait and let Bitcoin take over.
It seems probable that it would first come to pass where the consensus would just shift, right? Where the consensus would shift from using gold as money to using Bitcoin as money without any major variables changing. But I do wonder if 12 years from now, it's fusion reactors are much more popular, and now we're pumping out a bunch of gold that we're creating, or the asteroid minings, or whatever it is, whatever technological advancements that allow us to rapidly increase the supply of gold, and then we'd see some shifts take place at that point in time.
Yeah. But if you think about it a bit more, it's also a demographics issue, right? The central banks, who is their customer? It is the people. They have to provide stability to the people of that nation state. And demographics are all skewing to the older side right now. So they need to have the valuable thing that the older people think is valuable.
History has never stood still, and neither has money. Every transformation once sounded impossible until it became reality. Today, we're watching technology challenge assumptions that have existed for centuries. Whether Bitcoin becomes the next global monetary standard or simply another chapter in that evolution remains an open question. But the conversation is no longer theoretical. It's happening now. The biggest opportunities often emerge before the majority recognizes the shift. That's why understanding these ideas matters, regardless of where you stand. What do you think? If technology can reshape the foundations of money, could Bitcoin eventually replace gold as the world's preferred store of value? Or is gold's role untouchable? Share your thoughts in the comments. If you enjoyed this discussion, don't forget to like this video, subscribe to the channel, and turn on notifications so you never miss our next deep dive. Thanks for watching.